Though business sentiment remained weak in the fourth quarter, with the unreliable electricity supply and other structural constraints and the lagging effects of the civil unrest to blame, it's expected that conditions in the quarter would have been much better when compared to the third quarter. Easier lockdown restrictions are expected to have been supportive of retail sales during Black Friday and the spending during the festive season.
The expectation has been for a strong bounce back from the third quarter's impact of the riots, where we actually saw a significant contraction. However, data coming in has shown that this is not likely to be the case and that business sentiment remained severely depressed in the fourth quarter of last year. That is, that business confidence remained in depressed territory. The actual outcome for GDP is probably likely to be closer to about maybe 1.5% to 1% for the fourth quarter of last year, and this weak output shows the lagged impact that the July's riots have had on business sentiment in South Africa and indeed on business activity as well. Industrial production, which is mining, manufacturing and electricity production, is close to flat on that quarter, and if we have a look at some of the other areas such as retail sales, there has been a bounce back in the tourism sector from the easing and lockdown restrictions, and of course in retail sales on the Black Friday effect, but the strong anticipated growth and indeed the outcome of above 5% for 2021 now looks unlikely. The year could well record a figure of close to 4.8%.
It's anticipated that the agricultural sector would also have contributed positively to the GDP in the fourth quarter.
GDP contribution from agriculture, manufacturing, utilities and construction are expected to improve.
Stats SA is expected to also release the mining and manufacturing production data for January. Manufacturing production is expected to improve from earlier contractions, while mining production is expected to have contracted further in January when compared to December. Gloria Sefakomusi, SABC News, Johannesburg.
South Africa's foreign exchange reserves ticked up to 57.69 or 57.7 billion US dollars in February. That's up from 57.2 billion US dollars in January. Reserve Bank data shows that the reserves recorded for February are the highest since August 2021, when the country's reserves hit 58.4 billion US dollars. The drivers of the latest reserves included the US dollar gold price as well as the depreciation of the US dollar against other currencies.
I would say that there is a mixed view amongst economists as to just how important level of reserves is. Theoretically, one wants to see that a country has enough foreign exchange reserves to be able to cover the value of importing goods and services for at least 6 months or so. And in that regard, South Africa is fine. But it doesn't have a huge level of reserves. The other reason why reserves can be useful is if a central bank wants to intervene on the currency market to support its currency to prevent inflationary pressures from rising too far. If it has a lot of reserves, then it can do so. But as we're seeing in the case of Russia right now, which has a high level of reserves, even in the face of a real crisis, even that is insufficient to prevent a currency from dropping very sharply.